A new year brings new predictions, but if there's anything we've learned over the past 5 years, it's that predictions are a fool's game. However, here are a few elements we can be almost certain of as we move into 2025. A high-level overview of 2024 shows a fairly calm year for real estate, with total sales rising by a modest 11% compared to 2023. This growth was driven partly by lower interest rates, but also a track record of stability over the past 2 years, which boosted consumer confidence. A closer look at the data reveals that the fourth quarter of 2024 achieved 1,604 sales, marking the highest Q4 performance since 2021. This strong finish to the year highlights a positive momentum shift, setting the stage for increased activity in 2025. Canada will have a new government at some point in 2025. How much change and how quickly it will come remains unknown. However, we do know that both the current Liberal government and the Conservative government are committed to dramatically slowing immigration. Canada's population grew by over 3 million from 2021 to 2024, 98% of which coming from immigration. This is in stark contrast to Canada's average growth of 300,000 per year over the past few decades. This is one of the many components adding to the cost of Canadian real estate. In February 2020, the average home price in Canada was $539,000. By February 2022, during the market's peak, it had soared to $833,000 before settling at $718,000 in September of 2024. This national average trend aligns with Victoria. However, it is more extreme. The average home price in the Victoria core was $1,058,000 in February of 2020. In February 2022, that same house cost $1,570,000. That's a 48% increase in 2 years before leveling out at $1,337,000 in September of 2024. This fluctuation underscores the market's volatility, influenced by macroeconomic factors like interest rates and demand. The Bank of Canada cut interest rates 5 times in 2024, taking the overnight rate from 5% to 3.25%. These 5 cuts include 2 consecutive 50-point rate reductions, the largest drops since the 2009 global financial crisis, excluding the pandemic period. Most experts forecast that we will have more rate cuts ahead in 2025, but I anticipate it will be a more cautious approach as we are now in the neutral range. There is good news for renters. The fourth quarter of 2024 saw asking rents for all residential property types in Canada decline to a 15-month low. Despite this dip, average rents were 6.7% higher than 2 years ago and 18% higher than 3 years ago. Victoria has a large supply of purpose-built rental buildings completing, coupled with less immigration, which will continue to soften the rental market. What does this mean for the real estate market and the Victoria market specifically? It's important to keep in mind that real estate is highly local by nature and product type. Single-family homes in the core neighborhoods will continue to perform well. Fueling that category is the increase in the insured mortgage cap from $1 million to $1.5 million. Buyers will no longer have to put down 20% or more as a down payment. For a home worth $1.5 million, that takes the minimum down payment requirement from $300,000 to $125,000. Overall, I am optimistic about 2025. With interest rates stabilizing, increased consumer confidence, and improved affordability measures, the real estate landscape in Victoria is positioned for steady, sustainable growth. The market will continue to reward well-located and high-quality properties, and the ongoing shift in demographics and interest rate cuts will shape supply and demand dynamics. Whether you're buying or selling, 2025 presents opportunities for those who stay informed and adapt to evolving market conditions. I'm Alexi Argyriou with Anglo & Volkers.